All right, it's small account time. What's going on, guys? Welcome on into today's video. In today's video, I want to talk about three specific, I guess you can almost take it to four specific tips or things that you can work on to help grow or help build up a small trading account, which again, as we talked about in past videos over time, it has been, or it's an uphill battle. It really is. And so what we're doing is we're going to use my examples, and I want to show you guys the things that I'm taking away as I have been growing this or trying to grow this account over the past couple of months, strictly with day trades only on options. Okay, no shares. I've done it with shares and small caps. I've done that in the past. We're trying strictly with options and building strategies that we can replicate in any market conditions: long, short, Fed this, Fed that, bear market, bull market, QE, QT. It doesn't matter. Like, we want to have strategies that we can use based off technicals, based off setups that we see time and time again, every day, every week, every month. Okay? In a nutshell. In 1 second, I'm going to take myself off the screen and we're going to get right into today's video. So what we're looking at right now, and I'll pop myself off just because, let's just dive in. This is the small account for the month of December. So what I do is I take the logs, the trading logs from Webull every single day. I send them over here to TradeZella and I upload them on a TradeZella, and then boom. We're good to go. And Webull, essentially, the format that you can download your trades, your log, imports right in here very, very nicely. You don't need to do this. You can do this however you want, tracking on Excel, and that's what I did initially. So I want to start with December 2022 because we just finished the month of January 2023, and we have a completely different, where we got a lot of different stuff to dive into, and a much worse month, I will say, which we're going to dive into. So the biggest takeaways for this month that we can see was we had a 56% win rate. Not insane, but that's like not bad. And that's, guys, when we talk about this stuff, like, we're talking real. We're talking reality. Am I by any means amazing at this stuff? No. And you'll see after the results of January. But I think it's very almost idiotic to believe the 99, 95, 90+% win rates and that being consistent for people who are showing you, their trades on social media, who ultimately want you to buy their course or their Discord group or whatever. There's an incentive there, right? There's a lot of incentive on social media. I think the past couple months by doing this, here, I think that, we're trying to do this as real as possible. So I have no problem showing the ups and the downs, the losses, and there's a lot of them. So what we had was a total of $69 in the green for the month, which is nothing crazy. We actually had a better November. But whatever, we had, we're up $69. Cool. Here's what the numbers were. We're up actually more at one point, up $169, and actually gave back about $100 in that last week and a half to finish off the year. Not surprising going into the holiday time frame. I'll pull up the here's December. This is the last week of the year. Into that holiday time frame, things slowed down, things got choppy, and the market kind of changed. So we had that 19 winners, 15 losers, 34 trades, profit factor at 1.2, because a positive win rate with a roughly average winner and average loser that were about the same. So going into January, I really made it a point to try to build this up to where my average winner is substantially larger than my average loser. And there's a couple points I want to get into that are going to be very, very crucial into how you can do that, and a couple ways you can do that, which we'll dive into, and we'll show you guys how I'm doing it, because I did make some good progress there. The problem was where we ended up making good progress, there's push and pull. There's give and take, or at least there was for me in this past month. Market conditions changing, things just kind of feeling a bit choppier, not a lot of follow through, but that's kind of besides the point. The markets are always going to change, and it comes down to you adapting to that over time, and that will always be something that you learn and build off of going forward throughout your career anyway. So I'm not super worried about that, because it's going to come and go, right? That's going to be there. It's going to happen. But if I jump over to this month, which I just uploaded the final report of this past month, and what you'll see is that down $180 for the month of January 2023. I look back at this and I say to myself, this kind of sucks. But what I will also mention is that obviously you can see the winning, or the days, winning, loss, 8 winning days, 10 loss days, 31% win rate. took 39 trades, so a couple more trades than the month of December. Okay, 39 trades, and we had a lower win rate. I'll get into some of the goals and how we can improve our numbers going forward into the month of February, a shorter month than January, but same general idea. I'm not really too worried about the amount of days. It doesn't really matter. It all evens out at the end of the year. Anyway, but our profit factor was down, obviously, as we had a red month. Not terrible, to be honest with you. It's not terrible. This is where I was really frustrated, because what we did was our goal was to work on building the average winner up, and the average winner is now 41.67, but our average loser is 25.19. So that's, to be honest, now, is that a perfect 2-to-1 risk reward? Guys, let me tell you right now, it's not going to be super easy to do that, especially when you're trading a small account options. It's not easy to do. Obviously, when you trade out of the money contracts, you can have these huge winners, and then you can have technically smaller losers. The problem is that your win rate is going to be dog shit, okay? And so I kind of dealt with a bit of that this past month. The problem was the win rate was not able to live up to what it needed to be in order for this to be profitable. So when I said that there's push and pull, yes, our risk reward on paper here was better on average, okay? But with that, there comes a little bit that you have to give away. In this case, about 20 or so percent that we had to give away in terms of that win rate, which in this situation was too much, was just too much to keep us green. Okay, so the goal going forward, obviously, is to up the win rate, and there may be a little push and pull here, maybe a little bit of pull away from this average winner loser. But if that average winner is maybe $35 and that average loser is around 25, or let's say up to 30, worst case scenario, and that win rate gets back to 50+% in February, then we're looking good. We're better than, technically better than December, and we're, you know, in a green or a profitable strategy. So like, there's push and pull here when you're playing the small account options. Again, like we talked about, there are a lot of things going against you, and I want to dive into some of the data now going forward. So talk about win rate and the risk reward. There is a balance here. This is not something that is going to be very easy to just kind of go, oh yeah, I always have a 2-to-1 risk reward or a 3-to-1 risk reward and a 95% win rate all the time. It's just not reality. There will be times when you're dialed in and you're just kind of winning. There'll be times when you're just losing. And the past month, I think I've just felt like I've had a lot more losers than winners, obviously, as we can see. And when you're in that almost a rut, I think it's just critically important to make sure that you are sticking to solid risk management, because it's very easy to just let things go. Let these winners get larger and larger. But I will say that, to be honest, I didn't allow that to happen, which I'm proud of doing. And it's very, very, I think, good to see from my perspective. Okay. Now, I do want to pull up one more thing. Here's the account value of the small account. We can see that there are no positions right here. We can look over the past month at our trading P&L, what stocks did the best. Costco is pretty good. Tesla, pretty good. Unity Software, pretty good. Upstart, Amazon did pretty well. Microsoft and Google. Then we have Target and NVIDIA. Those are some of the green trades from this past month, or the green stocks. I've traded a couple of these stocks a couple of different times, most likely. Not all of them were just kind of one hit and done. But we started the month off and we're up around $500. Then we started the month off just under 500. And then we kind of proceeded to give a lot of that back and chopped up. And, you know, it really wasn't like a one day or a one trade type of deal, but it was just kind of a consistent 30% win rate type of deal. With our risk reward structure, just wasn't able to make up for that 30% win rate. Finished the day on the last day of the month, up 25, up 9%, which is kind of cool. I guess it's a good way to finish the month, but obviously, you know, you want to see us do a better job of that. Now, I've put in about a couple $100 over the course of this a challenge, starting from like $100, then I fell back to 50, added 50 a couple of times, had to reset, and then we've got it up to a point now where I haven't added any money since like September of 2022, and so we've been kind of just trying to work through the kinks and try to figure out a solid strategy that can work for us. And so that's what we're kind of at right now. So we're at 308 on the account as we speak. The goal is to get to $1,000 and not add any money additionally into the account from here or from September, which was right here. September, we fell back to $34. That's when I added that last chunk of money back on mid to late September 2022. Okay, so getting deeper into this, the next piece that I want to talk about is like understanding your data, understanding your numbers. So we talk about the numbers, okay? If I can keep these numbers close to the same or keep that distance between them similar and just work this win rate, we're in a much better spot. How do we work that win rate? What can we do? What can we do to make it so that we keep this average winner and loser in this, with a nice distance between each other, right? With the winners nice and large compared to the loser. But how do we get that win rate up now to 50% or more? Because if we can do that, we're gold. Like, we're in a great system that, hey, if I could just run that system consistently, act like a robot, right? And run that system, I don't care. I really don't care if it's, what happens on this trade or that trade. It doesn't matter to me. What matters to me is the system works over the course of weeks, months, and years, and I can scale it up over time, right? That's what I'm seeking here. Okay, I'm seeking that. I'm not seeking, I think I'm going to be right because I think this is going to happen, so I'm going to go huge bet on this, make a ton of money, maybe, if I'm right, then go do the same thing, blow it on the next trade, and then go back and forth, have really good runs, make a ton of money, then have really terrible runs and lose it all, right? And potentially wipe the account out. Like, that's not what we're trying to do. So I got to dive deeper into the data, okay? And so let's dive into some of the reports and some of the data here from TradeZealot. So what I'm going to do is I'm going to go deeper into this, and I'm going to look at the detailed section. And what I want to know, as I was diving through this, what happens if I take certain trades or take certain option contracts that are different prices? Go to price. What do we see? Now, obviously, there are a ton more contracts that I have traded under $2 per contract. Yes, because there are, number one, I can buy more of them. And number two, that the account's a small account, right? You're going to trade more contracts that are cheaper because you don't have a larger account to trade larger size contracts, right? So that's what I'm going to do. Out of the money contracts and whatnot. But what I found here in the past month was that it's very, very clear. Contracts under $2, horrible, down nearly $300 in that. But contracts over $2 make up for about $104 in gains. Now, is there a ton of data there? Not necessarily. But what it's telling me is that right now, the higher the price the option, the better I'm doing. The lower the price, the worse I'm doing. And why is that a part of this game? I think a lot of this comes back to, if we go back to that main overview page or go back to that dashboard page, what you'll see is that when you trade out of the money contracts, what you'll see is that you could potentially have a nice average winner compared to average loser, depending on how you trade them. But what you'll notice is that you're probably going to have a win rate that's not that great. Okay, and I have found personally that at least this past month, I have had a scenario where now those cheaper contracts, those out of the money contracts, I have done worse on them, having more losers than winners, number one. But number two, I'm also finding that those are the trades that skew that risk reward a bit more. We're going to have on average maybe $25 to $40 on those losses versus maybe 20 or less on other trades. Why? Because when you're trading with these contracts that are out of the money, when things turn against you and they go towards your stop, you're fighting a bunch of different things, right? As we talk about theta decay, we're talking volatility, we're talking about a contract that as of right now is essentially, if we were to close by the expiration date at the price the stock is at with an out of the money contract, it's worth nothing. So it needs to get up towards the money for it to have more value, right? Or more perceived value as it gets closer and closer to the strike, or to where it would be in the money, the stock getting closer and closer to that strike price. So you're fighting a lot of stuff, and it's a lot of pressure against it. And so I've just found, to be honest, I don't give a freaking shit what you see on social media. I have no idea what people trade. People love to put the flashy numbers where, oh, look at me, I'm up 500% on this trade. I just know, based off my system and how I mentally can look at things and compartmentalize things and just look at that and say, what works for me, that doesn't work for me. And so I'm just going to, you got to stop doing. The problem is that, of course, we are on a small account, so we can't really trade contracts that are worth $4. But the new rule going forward into the month of February is nothing under $1, the higher the better. Okay, if I can get higher the better contracts in terms of price, you work your account up from 0 to 50 to 100. The more money you put in, you're buying yourself the ability to have more stability in your option contracts, the larger your account is. And so if you've grown your account from nothing, or you got in your account to a certain point, obviously don't jump and start jump and ship from what got you there. But in my example, I'm seeing the data that's telling me that, hey, what's working right now and what's better for you is the more expensive stuff. Okay, so that's one thing. Now, price of trades that, let's talk about the type of day, okay? It's kind of interesting when we talk about the type of day. So I go to market behavior here, and what I see is that I'm actually best when the market's down. So when it's down 1% to 0%, that's when I'm actually at my best. When the market's actually up between 0 and 1%, I'm at my worst. And when the markets have these super outlier days, up 1 to 2 or more, or down 1 to 2 or more, I tend to not have great days. We actually haven't had, to be honest, many of those days this month, or actually any of those days this month that I've traded on. But what it's telling me is that, to be honest, I've actually done better on the downside. Now, am I playing a lot more calls and puts? No, I'm playing more puts than calls. Not necessarily, but it's just something to look deeper into, to kind of unpack. Like, hey, like, is there a correlation here? Can I build something out, or can I pull something out of this that makes sense? Okay, and if you start seeing data that's like, whoa, hey, you're actually much better on green on days that we're down, versus up. That's something to kind of build in or back your way into. Okay, what am I trading on those days? Is it bear flags? Is it, breakdowns, support breakdowns? Like, what am I playing on those days that's working so well? And when I see that again, that's where we can size up, or that's where we can kind of let things go a bit longer and give it a longer leash, right? So basically, I wanted to dive deeper, or I've gone through a lot of this stuff, and it's really, really cool information to look at. Here is my performance with days till expiration. So the sweet spot for me is like under 10 days, but more than 3 days until expiration of contracts. That's where I'm finding the best. If I go under 3 days, or 3 days or less till expiration, what I find is that those contracts are pretty volatile. And if you're wrong, they're going to bleed on you very, very fast. And I've actually traded, honestly, too many of those types of contracts that are on this 3 days till expiration. So no more of that. We're trying to build this thing out about roughly a week, give myself about a week until expiration. Obviously, if it's a Monday, we're looking at playing Friday contracts. If it's like Wednesday, I'm going to play next week's Friday's contracts, right? There's no point to try to play contracts that are going to expire, tomorrow or the next day, and sometimes these scenarios, some of these trades take a bit of time. As I dive into the time, funny enough, this past month, the longer the trade, the more money. And the reason why is because those are the ones that tend to work for me, right? They're trending in my direction, and I kind of like take some profits off if I have a couple contracts, or let things kind of ride for the full extent of the trade, where my targets were on the stock. And those tend to be the best ones, So given the time and given that information, right? If you're going to have a same day expiration contract, right? Or even a couple days out, right? And you have a situation where you're in a trade for 2 hours, 2 to 3 hours, even 4 hours, there's going to be a lot of time decay on that. And so you better get a big move in your direction, or else if you don't, not looking good. So hopefully this makes some sense. And the biggest goals going forward, to finish things up, I want to improve my win rate by improving the quality of setups and playing contracts that have a $1, ideally higher the price, the better. That's goal number 1. Number 2 is to improve the risk reward with taking higher price options. This way, I'm not going to be sitting in trades or with options that have massive drawdowns, because if they're out of the money and we see a move against us and it takes a couple of hours, or it's an hour or half hour into the trade, those contracts are coming back hard, and those premiums are going to come back pretty hard, pretty fast. So that's the kind of the goal. Hopefully this makes some sense, and hopefully gives you something to kind of build off of yourself if you are someone who is looking to utilize data and try to build out a strategy that works for you when it comes to building a small account. I think that it's really important, in my opinion. This is just my take on it. If you want longevity in the space and in the game, that you have a system and a strategy that you can build upon, that you can replicate. All I know is that, hey, if I had this strategy in place, I had an average winner of this price, average reserve this price, all I got to do now is focus on that win rate. So keep this in mind. Maybe cut out, or try to cut out some of the bad trades, or some of the extra trades, and maybe trade less for the month of February. Maybe trying to trade 30 trades or less for the entire month instead of trading up near 40 trades. If we can do that and cut out some of the crap, cut out some of the fat, and we can get this win rate better, or get that to the upside, maybe the market just changes and it kind of fits my style a bit better anyway. That will always come and go. We're going to be in business, and we're going to be doing pretty well. So hopefully we're in a good spot for next month. That is the goal. Thanks so much for watching. If you guys got anything out of the video, like always, thumbs up button. Consider subscribing on here to the channel. Any other links and resources will link up down below. But I appreciate you guys like always, and happy trading. Peace out.